Hello, hello. Can you guys hear me?
Yep,
All
I
right,
can hear you, Vivek.
I can hear you as well. So we are done with our system testing. Thank you for helping me through that. Just one sec. So what's going on, guys? Uh, we were off for last week. I was off, but good to be back on our regular schedule. I would say it was a good break with family. Visiting some places. So that was nice. But I missed our doing these Saturday meetings because this is like one of a few meetings that I have over the week. Otherwise, like investing is such a lonely profession. You don't get to talk to a lot of people. Uh, so, but anyway, good to be back. uh, Hello, Sunita. How are you?
Thank you, Vivek. I really enjoy your meeting.
You're welcome. I enjoy
Though,
I enjoyed
though
it as much as you guys.
it's a long meeting, but
Yeah, yeah. I mean, it's yeah. Uh, we always try to say, hey, maybe we should do it in a 2 hours, but it's like 3 hours, 4 hours, and yeah, there's no obligation. If you don't want to drop off, feel free. But I want to use this forum for people to come and talk about the stuff and all that stuff. So, anything new from you guys before I get started? Because I have a lot of topics to talk about. But I just want to hear what anything new that you guys have found out or you've been working on, last couple of weeks. Hey, Corey, how are you?
Hi, I'm new here. I attend Thursday evenings at a different online meetup that you
Yeah,
dropped in on, and thought I'd come check you out here. So
cool.
yeah, I'm into long-term investing, and mostly just balance my portfolios. Don't do short-term trading or pick stocks. But yeah, thought I'd come check it out.
Good to see you here as well. So you said you're a long-term investor, right?
Yep.
Okay. All right. So that matches with my way or style of investing. I am a really, really long-term. I try to be like if the business continues to perform, I just don't want to sell my business.
Yeah, I've tried making a living at short-term trading, and just have I am objectively not very good at it. So I stick with the long-term investing. I'm good at that.
I've never figured out. I mean, there are a lot of short-term traders, swing traders, day traders in this meeting as well, but that's not my cup of tea. I trade daily, but all moves are focused towards those are little steps towards the long-term objective. All right. Anyone else here joining? So I think Corey, this is your first meeting,
Yeah.
because yeah, we met on Thursday. So good to see you here. Anyone else joining for the first time? Just wondering if there is a new person. Maybe we can get few intros before we dive into today's discussion. Sam, you have your hand up. What do you got?
A security issue.
Wow. What kind of a security issues? It's a loaded term.
I almost had a girlfriend.
We should
Uh,
discuss
what
this
happened?
over beer.
What happened was it was a bot in Southeast Asia.
Yeah.
So when I was in China, I read about all these people getting ripped off
Yeah,
hundreds of thousands of Hong Kong dollars, and
pig butchering. That's what the scam is
yeah,
called.
so I just said no after it got a little ridiculous.
No. I just don't even respond to these messages. I can't tell
Oh,
you how many
excuse
messages.
me, Vivek. It was very alluring.
Yeah.
It
No.
was, but of course, I was going, who wants me? I mean, why would anybody be interested in me? And
Uh, I can't
anyways,
tell.
very careful. You're married, so you don't have to worry about it, but it's out there, and they could steal a lot of your money.
Do you think these bots, care
No,
about
it was real people. It was real people, Vivek.
Yeah. So so these are the lot of, you can watch few documentaries, not, f- jokes aside, it's a very, I would say, serious problem is that many of these people who basically are forced to do this work are doing under duress, right? So they are either kidnapped or they are under pressure and they work. There are very well organized crime gangs. They run these farms from many countries in Southeast Asia, and these folks are held captive, and they have to meet their quota of how much money they can swindle from, the people in the developed countries. So it's a pathetic situation. Not that all of them are actually doing for themselves, but they have to do it in order to stay alive, and it's a pretty common scam. There are a lot of documentaries around it. If you look at a financial media, there will be stories around these, and this is pretty common, especially after the crypto started coming in. It becomes much easier to lure unsuspecting victims with the promises of, yeah, you can make 20% per month kind of a stuff, and these things, and people just get sucked into it. So
Vivek, it wasn't like that.
or
It was she's the niece of a Morgan
yeah,
Stanley top 50.
yeah.
It started
So
from there.
so one, there is these are like they prey on people's greed, or they prey on people's on the nature of being friendly and love, and looking for a love. So there are like romantic scams. There are scams, they try to scam elderly people based on, now with an AI, etc. You can generate the message in the voice of your grandson, etc. I have read about many scams where a message will come saying that, grandma, grandpa, I got into this issues. Now I'm in the police station, and you need to pay like $2,000 for bail and all that stuff. There are a lot of stuff which is going on. So, and with the use of AI, it is becoming more and more realistic, right? So all of us have to watch out for these things. If something is too good to be true, it probably is. I get too many of these messages sometimes on a meetup and on directly on phone. I get randomly invited to some parties in Napa and all that stuff, or someone like, hey, I look cute, and we want to have a friendship with me. All these crap messages we continue getting. Just have to watch out for it. That's all. We should not lower our guard based on whatever. It doesn't matter how what comes out. And in some cases, I might ignore a genuine message from some genuine person. That is also possible, but I have to watch out for myself. And in that case, if the person really genuine, they'll probably reach out twice, and then I'll communicate with them. Anyway, so but that is a PSA. There's a lot of these scams have been going around, but with AI and with crypto, the combination of these two have taken it to completely to a next level. Right. All right. Anyone else here for the first time? Any first timers here? Or regular folks? I know one group is not joining today, the Michigan group, because they're having their lunch get together, so it's just great. I'll get to hear from them maybe later. Okay, it's cool. I guess we are all set to get started. So let me share my screen before I go. Hold on. Meanwhile, if you have any other, I see Tom, you have put in some message, so we should. I'll look into that. Okay. All right, you guys can see my screen? Oh, do let me know.
Yes.
Okay, cool. You're seeing the topics for today, right? Not some different screen.
Yes.
Okay, thank you, Tom. All right, so Tom says, watch marijuana stock next week. DA discussion due Monday on rescheduling. Yeah, I've now grown tired of these whole rescheduling discussions. But you're right. That's the big tailwind. It would be big tailwind behind the marijuana stocks if eventually it is rescheduled from schedule
Miss you
one.
hang in the bathroom.
Hold on. It's here some background. Okay. Yeah, if it get rescheduled from schedule 1 to schedule 3, it will be there will be a lot of a tailwind, especially I would say for the US based companies, because in absence of this rescheduling, they do not have access to capital. Those companies cannot deduct some of the expenses that other companies in other businesses can deduct as a normal course of their business. So yeah, but I know these cannabis companies have been like decimated over the past few years. I think 2021 or 2022, I spent a lot of time in reviewing a lot of these companies, the whole supply chain, the different products that these companies have. And I don't think I've looked at this industry since then, maybe last 3-4 years. But yeah, if it gets rescheduled, that's where we should be watching. We should be looking for. And other thing we need to look at is a lot of these companies that trade on US market are actually Canadian companies. So I'm not sure if that will will benefit as much as some of the US companies will, because Canadian companies actually already have access to all those capital, etc., from Canada, but the US companies don't. So that's another point. But so it says we have a due on Monday, so let's watch out. Maybe there will be more volatility on all these cannabis stocks on Monday. So if you are a vol player, that might be a good day to maybe put some trades for these cannabis companies. So they rallied around 25% in late April, but I guess even after that rally, they probably are still way off their all-time highs, I guess. My reading is majority of all these companies have lost tons of money over the last. I think after 2021 craziness, none of these companies have yet recovered from there. So I'm just looking at some of the data. IIPR sectors. Okay, so let me just bring it up. Right. So actually, I created a watch list of some few cannabis companies, Tilray and all that. Yeah, year-to-date change. I think IIPR still looks good, but a lot of other companies have been pretty bad. Look at a 5-year. Again, except IIPR, because that's a REIT. That's not a 100% pure play cannabis company. And I remember dealing, trading options on IIPR, but all other companies have lost like 90% down over the last 5 years. So hopefully fortunes will turn around after Monday. All right, anything else? Okay. All right, so let's get started, guys. Welcome everyone to our discussion number 327. Every Saturday, 6 years plus going now, to talk about everything and around investing as a retail DIY investor. Nothing goes off limits except, when it comes to investing. Of course, I don't want to discuss politics, religion, and on a lot of, those kind of stuff. But when it comes to investing, let's bring about stocks, bonds, crypto, real estate, even though I'm not a big on a real estate, but some of you do trade or are big real estate investors. So we can help out each other. I try to focus mostly on the assets that I can buy and sell at a click of a mouse or a tap on my phone, and real estate is not one of them. So what do you want to talk about today? One is this week was a lesson. I want to share one lesson from couple of positions in my portfolio. Those were the moonshot positions, and some lesson that came out of how those two companies have moved. I want to share that. Other one I want to talk about, again, this is more related to the basic education as an investor. I'm a big fan of lifelong learner. We should continue to learn. And time and again, I will bring up some topics which to some of you might sound very basic, but then I also know there are a lot of people who are just starting their investing journey and might be useful. So one of the topics today I want to go through is some of the finance terms, right? Which we hear about in the financial media or we read about it. What do actually those mean? So those are the two big topics. I also want to cover some of the meltdown that we are seeing on the crypto side. And of course, we look at a macro and all that stuff, right? I want to give you an update on the some of the additional features that are built on Optalyzer. I know some of you already are have access to it. By the way, whoever had signed up for on the wait list should have access to it already. If you don't, do let me know. Okay, but these are the main topics. Anything else you guys want to add? Cool. All right, so let's get going. So let's look on the macro side first. So no surprises. I mean, we saw some sell-off on the large caps. So Mag 7 are now becoming Lag 7, right? And mostly NASDAQ and the S&P 500, we saw some sell-off over there. But on the other side, Dow Jones is continued to hit new all-time highs. And also we saw IWM, Russell 2000, gaining strength. Saw strength on the regional banks, right? So clearly we are seeing some rotation in the leadership in terms of the money moving from one sector to another sector. And if you have well diversified in your portfolio, this is where if one portion of a portfolio is yin, the another one is yang. So when I was looking at my portfolio, while some of the big stocks or that I've held for years, the Mag 7s, they did not perform. Surprisingly, a winner has been like SCHD, right? SCHD was up. I think that's like up year to date, some 16 or 17%. Right? So if you look at SCHD, that's up 16%. Right? So while I wait for the Mag 7s to recover, having some of these more value-oriented tickers in your portfolio help when the market is, when the rotation is happening. SCSD did not perform in 2023 and 2024. You might think, oh my gosh, you feel like bad holding it, but I always wanted to have one portion of my portfolio which is holding the companies that are cash flow generating, dividend paying big businesses, and SCHD does have those companies. Number two, the reason, other reason why I still hold SCHD is it has a lot of companies that I don't own in my portfolio, or a lot of sectors that I don't want to hold individual companies in. For example, healthcare sector. I don't want to own, I don't understand healthcare sector as well as some of the other sectors. And given I have only 24 hours in the day, I'm like, you know what? I'll just hold any ETF related to it. So when I looked at an overall multiple ETFs and how they overlap with my portfolio, I found SGSD gives me exposure to the companies and to the sectors that I don't directly own in my portfolio. But this year it has worked pretty well. So rotation is happening. The other thing was collapse in the oil prices. And if you recall, I've always maintained the fact that doesn't matter what comes out of administration mouth, I will only believe if I see the traffic moving through Strait of Hormuz. So now we are actually start to see some of the traffic moving from Strait of Hormuz. Right now, this is as of end of the week. I don't know what could happen tomorrow or a week later. Right? These we are already seeing some cracks in the so-called peace agreement, which was like a 60 days of there is no treaty signed. It was basically, hey, let's talk again after 60 days and, lay low, stay cool. And we are already seeing that tacit agreement is already being broken. And Iran is bombing at some places, and now we are going back to bombing. So I don't know how long will this continue, but so for now, it's a good sign to see this the tankers start to move again through Strait of Hormuz. We're not going to get gas prices down immediately because these things just don't, these things take time. So there will be still time before we can see the prices on the pump. But I would say this is in the right direction, right? So we saw WTI below $70 per barrel, and that should also, you could see some of the other related stocks or the ETFs. So I own XLE in my portfolio. So XLE is now back to what, 53 or close to 54. I have a short put on this because maybe 2 months ago, whenever this conflict got escalated, my short call was called away at 55. And I've been selling short put at 55 since then, trying to see if I can get back my shares. And, hopefully I'll get those shares back in my portfolio to maintain the similar level of exposure that I had earlier. And in meantime, in this whole round trip, you make a few dollars through the option premium. So I think I have one for July, or maybe I rolled it out to August, who knows. But I won't mind owning back some of those shares that I had to let it go after when the conflict had started. What else came out this week? We had a PCE numbers, and PCE number is what the Fed looks at. They don't look at they do look at CPI number, but that's not the number that they use to decide on their policy. It's the PCE number, and PCE number is not that great. And of course, it came out for a May number. It was up 4.1% year over year in May. That means the inflation continues to run hot. But now with the oil prices hopefully coming down, with oil started to flowing in, the forecast is that maybe we will have a lower, the contribution of energy to the headline CPI will start to go down. So hopefully we will, should start to see these numbers trend towards where the Fed wants it to be, which is to go low. But again, I don't think the number will start to show up in June. But there is another, I see another factor that still keep the inflation high, even though the energy prices have come down, which is AI inflation, right? Apple already announced that they're gonna increase. They actually have increased the prices of the notebooks, and I think Mac laptops, and I think also iPad. I don't think they've done for the iPhones just yet, but wouldn't be surprised if they also increase for their iPhone a little bit. I think they're just testing the water to see how consumer react to the price increase. iPhone is the engine that drives Apple's revenue, so they probably rightly they are a little cautious before they increase the prices. But that's what the media is now terming as AI inflation. So it'll be fun to see the tussle between energy prices going down, which should help in the inflation side, and now the memory prices going up, which is causing the increase in these goods, and that traditionally have been just prices have been coming down, right? It's like last 40-50 years, all we have been seeing when all the prices of these electronic goods have been coming down, except during COVID when the prices start to rise, and now we might see increase in prices again. Blame it all on microns and the SanDisks of the world, right? the increase in memory prices. I think Tim Cook came out and said he hasn't seen this flood like situation in the last 40 years, and they're increasing the prices. Similarly, I think Microsoft has increased the prices of Xbox console. Any gamers out here? I'm not a gamer, so that doesn't hurt me. And right now, I'm not looking to buy any new laptops. So hopefully, I am a little bit shielded from Apple prices. But if you're a gamer, watch out for increase in prices on your gaming console. Right? I don't know if Nintendo has increased the prices or not, but you guys can tell me if you are a user of those devices. But we are seeing in the market that inflation increased due to these AI related reasons. Memory I don't think it's increase in energy prices, mostly related to memory. Memory prices have gone through roof, and that shows up in Micron results, right? So Micron reported results, and they just shocked the street. If you're interested, we can go through the result later on. But that's what's happening on an AI front. Right? Surprisingly, consumer is still resilient. So both the personal spending and income both rose 0.75%, right? It looks like they're drawing down on their savings, with the personal savings rate falling to just 3%. So again, we have no idea what will gonna happen in next 3, 4, 5 months. But even despite in the face of higher gas prices, consumers still continue to spend or continue to increase their spending, though not by too much, but this is still a positive sign. Because if countries now, with let's say energy prices going down and inflation if starts to cool and consumers continue to spend, that should bode well for the other sectors of economy as well. So let's skip this. Based on the consumer strength, market is now looking at revise the GDP quarter growth to 2.1%, right? Which 2.2% plus GDP growth is still a decent growth. So no wonder now we're looking at rotation in some of the real economy stocks, because if economy continues to stay strong, consumer continue to spend, the companies that you and I deal on daily basis in our lives, they will continue to do well. Other thing is, with the falling oil prices, Mr. Kevin Walsh and other central bankers around the world, they might go a little slow on increasing the rates, or maybe look at, okay, not increasing the rates. Right? And that will be good for the markets if the rates continue to stay low. Looks like markets start to think that the central banks on the Canada and the UK, they'll probably go slow on taming down inflation by increasing the rates. Yeah, because hey, if energy price will take care of inflation, then central bank don't have to interject by tweaking the rates. That's another thing. So market is already pricing in fewer interest rate hikes than what it was earlier. So if you look at these dark blue ones, these are the highest market implied change and the latest expectations are now coming down. So that will be all good for the markets. What else? US dollar hit 2026 high. In that, I could feel this in my portfolio, especially if you hold stocks which are outside of US, do most of their business in non-US currency, or if you hold stocks in emerging markets, you would have noticed this. On one fine day in this week, I saw, why is EEM like down 4.5%, right? And then I realized, okay, the Chinese stocks are under pressure. Southeast Asian stocks are under pressure. Why? Because the dollar becomes stronger. If the dollar becomes stronger, many of these emerging market economies stocks, they do underperform. Two reasons. One is when they convert their numbers into dollars, the numbers become lower. Number two, many of these economies have debt which is dollar denominated, and the strong dollar basically hurt their repayment capability, right? So, and I was surprised that like suddenly I think EEM is down 4%. But it is what it is, right? It worked well in 2025. I will continue to hold diversified positions outside US. Because you can never guess which side and how the macro things will move. I've not found any great investors who invest based on the macro level. It's very difficult to predict. So I just want to hold a diversified portfolio, which does include investments outside US, investments in emerging companies in emerging markets, or ETFs in emerging markets. And those were weak for the in this week because of rising dollars. Okay, all right. So what else I want to talk about? I want to give you some updates on Optalyzer, but before that, let me also go through some of the questions that I see here. Chip stocks. So Pranav, I want to talk about chip stocks. Maybe we'll get through that. I signed up, but I did not get any information on that. I don't know. Did it maybe check your spam folder? Because I did send email to everyone who had signed up. I think June 20th, 22nd was the last batch, which was enabled for access. And anyone else who had signed up and not gotten email? First of all, maybe check your spam email. I don't know if the filter is sending it in the spam. But from my side, I think I enabled everyone. Sam is saying, I bought 10 shares of Google because Dow Jones. Yeah, Google is now becoming part of Dow Jones. I don't know. I don't pay much attention to Dow Jones. It's a screwed up index, but what are you going to do? You know, it's a legacy, and Dow Jones is continue to maintain it. Rest of the world looks at it. So it is what it is. But I just don't like that index. It's a price weighted index, which make completely no sense. But yeah, financial media will continue to talk about it because it's the oldest index of all the three. 50 more shares of CoreWeave. I don't know. I mean, I don't want to hold CoreWeave. Media talks CoreWeave as a tech company. I don't think CoreWeave is a tech company. CoreWeave's customers are tech companies, but that doesn't make CoreWeave as a tech company. So, and if I look at run the CoreWeave through our framework, it doesn't, score well on the framework. So I've never bought shares on CoreWeave. I don't think I'm gonna buy it. Basically, in my understanding, CoreWeave is REIT, or call it equipment leasing, financing and leasing company, right? That's what all it does. It buys chips from NVIDIA. It rents out data centers from DLTR or whatever, or maybe build its data centers, and then it rents that capacity out to hyperscalers. So it's basically leasing out the space, right? It's not a tech company. Its customers are tech. The equipment that it leases out is a tech, but that doesn't make it as a tech company, right? It's in the leasing, financing, and leasing business. And I don't understand. I mean, the numbers don't look that great. Margins are thin. But when it comes to AI, anything that has anything to do with the AI, the stock, will jump up. I know CoreWeave has not done that great. I don't know where is CoreWeave. I've not looked at stocks. CRWV. Yeah, I mean, after the IPO, probably not much, right? It's back to where it was you're looking at almost a year ago. Back to where it was a year ago. There's a lot of hype on many of these. So pay attention to what these companies do, what their business, are. And let me just pull up CoreWeave number because it talked about CoreWeave. CRWV. Did I ever analyze this before? Okay, no. Well, let it run the numbers on the quality of business and how it rates on the framework. Murli said, what on the street is spot prices are 5x the negotiated rate. What are other people hearing on memory prices? And all I know is that Sanjay had mentioned, Sanjay Mehrotra, the CEO of Micron, like they're completely booked till 2027, right? Companies have paid them $20 or $22 billion in advance as a cash just to lock in the supply for memory chips. Right? You would want to be in that position. MU and SanDisk stocks, why going so much up and down? These are the hot stocks, hot source stocks, and will continue to stay a lot more volatile because there are a lot of traders who are positioned themselves in terms of buying out of our money on the calls, and then the market makers will try to hedge their positions by buying the stock. So there's a lot of, I would say, gamma squeeze, which would be going in this one. These are very volatile stocks. Too much of an interest, not just on the stock side, but a lot more on the option sides, which adds a lot more to the volatility. Okay, so let's look at a CoreWeave from a business point of view, right? So look, come on, it's like 1.9 score on 10, bad balance sheet, no profitability, or so no moat, which shows up in their numbers. If you look at return on capital invested is negative, maybe you can tell me this is a new company, will take time. Sure, I'll wait. But 337% capex, it's a huge capital intensive business, right? But who cares when it's related to AI? People will jump onto it. So understand what you are owning. I just don't want to own this business. Okay, Corey says rising dollar has kicked my ass. Also, I'm holding ex-US stocks, gold, silver, BTC. Yeah, all these don't do well when the dollar is strong. SanDisk is SSD base, similar supply and demand. Again, if I go back and look at SanDisk Micron, historically, these have been cyclical business, and these are a low margin business. I'm still trying to figure out another 5 years down the line, will the same story continue to play out on MU or SNDK or Western Digital, etc., or not? I don't own any positions in any of these companies. and I'm okay to wait it out, right? I don't want to buy a company which is like for next 2 years or 3 years, right? And I don't know when this cycle will go away, but historically, and looking at like last 10, 15 years of data, it's not a great margin business. That's holding me back. If these tailwinds behind the business will continue, these should start to see maybe in another next 1 year should start to show up on their financial numbers. Samsung, Hynix, Micron, some of the big memory suppliers. And I think I also heard a news that SK Hynix is now planning to list in US. So that should also will give a boost to its stock price. And if look at the Korean stock market, that's even crazier because SK Hynix and Samsung are big portions on the Korean stock market. The Korean stock market behaves like a meme stock. It's crazy to think about it that an ETF, which is like at a country level ETF, could move up or down like 8%, 10%, double-digit movements in a single day. Some days it's fun to watch that they have so the Korean market have a circuit breakers. Well, they will stop trading if the stock moves up or down, beyond a certain percent. And on one day you see that the circuit breaker on the downside has been hit. And then the next day you'll see the news that the circuit breaker on the upside has been hit. And we are not talking about an individual company. I've seen many individual companies will go down 20%, 30%. I'm going to talk about a company in my portfolio that was down 50% on a single day, right? But we are talking about a country ETF, right? Remind me, I think it's EWK. Is that a Korean? No, EWK is Belgium. Remind me, what's a Korean ETF? Oh, hold on. Let me go to where we were. I had the watch list page, right? Open. I think I have the country ETFs out here. I did add country ETFs. Country ETFs. Korea. Brazil versus South Korea. EWY. First of all, it is up like 200% in a year. It's a country ETF. So let's look at EWY. Jesus. Look at the movements. This is at a country level. But what can you do? This is a very concentrated stock exchange. I mean, we lament the fact that, oh my gosh, top 10 in the US stock market is equal to close to 40% of the overall stock market, and market is concentrated. You ain't seen these other markets in which some of the individual company itself is like 20% of the market, right? So if you're trading in these markets, you better be careful. There's a lot of a concentration risk on this one. And right now, all these are driven by the AI, the demand for AI. Murali says on GPU leasing, it's similar to utility play, but without the downside being guaranteed by the general public. Yeah, you can look into that one. But for me, leasing, I mean, at the end of the day, it's a leasing business. And number two, we are also seeing many of these hyperscalers morally are going out and start to build their own. I think there was a news from Microsoft. They tied up to build maybe 1 gigawatt capacity? Some news. So I'm not too bullish on all of these neo clouds. They will continue to see the demand until there is like shortage of availability of these chips because the AI demand is so high. I don't know, for how long these high demand will continue. So at the end of the day, I want to own a business which is a good business, generates decent margins. I don't think these leasing businesses fall in that category. All right, a few more stuff. Let me also share the link for the watch list. So not for the watch list, for the wait list. If anyone of you also sign up for it, the wait list is, I'm opening the wait list again. Those who already signed up for Optalyzer wait list earlier, like I mentioned earlier, that I've invited everyone to come and try it out. If you do not see it in your inbox, check your spam mails. So a few more updates that I've done. One is this quality score, because this is one thing which I've been sorely wanted to see the businesses that I hold in my portfolio, right? How do they stack in terms of my framework for quality, right? So now let me bring up the demo account so I can share that with you. So now let's say if you click on your portfolio, you should be able to see the quality score against the stuff that you hold in your portfolio, right? And there's no harm in owning lower quality, because this quality score is derived from what's the financials of the past tell you, but the narrative of future could be different, right? But at least you would get to know what % of your portfolio is based on the demonstrated capability of the business versus the stories and the narratives of the future. And I'm not God. I don't want to play God and make and think that I know the future. But yes, some portion should be based on the stories of the future. Some portion should be based on, yeah, these companies have demonstrated that they can run the business profitably. They are good return of shareholder. They are good caretaker of shareholder capital and all that. That's based on the history. So I always want you to know, okay, which kind of business is you own. So now if you want to know it, you have a quality score available in the portfolio itself, right? This week I also added a watch list, still on beta because I'm still trying to polish it out, but something that I've not seen on other platforms that I've used is also addition of the quality score into the watch list itself, right? So first of all, you can see all this performance. If your portfolio is there, you can see all these numbers against your portfolio, valuation numbers, profitability numbers, so on and so forth, on all the stocks that you hold in your portfolio. But more importantly, in any of the watch lists that you create, and I didn't create anything in the demo account, so let me create one. Give me any watch list. Suggest me a name. Or maybe I go to my production account, because there I have to.
Do you have short floats?
Sorry?
Do you have short floats?
Say it again. I didn't get you.
Do you have short floats, like, shorting floats?
Oh, short float on this. I didn't look for it, but I'll take a note to see if I can add a short float as one of the numbers in here, right? But you can come and customize it. Let's say profitability, you want to see something else, you can edit your profitability view, picks whatever other metric that you're interested in. You can create your own view, right? If there are other parameters that you want, shoot me a note saying, like Dave, you said, get a short float. I'll try to find if this data provider has a short float information in it. If it is, then it's a piece of cake. I will just add to it, right?
Okay. The ticker, can you look at Bristol Myers, BMY?
Let me just, which ticker?
BMY, Bristol Myers. It's a pharma company.
Oh, B.
B as in boy, BMY. Yeah.
So so if I look at its quality score is 6.2, and then you can go and look into, click here, or I'll open a new tab. and see how this quality score has been derived, get into the details of it, so on and so forth. Well, yeah. Right, so this is, you'll get, okay, it's now refreshing the data for what are 15 years of financials to regenerate and see if the numbers change. But you can get all the information around metrics and, you know, the other stuff that we already have. I'm not sure what you wanted to look in BMY.
No, you said put a sticker, so I just throw a sticker.
Oh, okay, ticker. Yeah, yeah. Oh, okay. Thank you. Yeah. So, you know, I have created a lot of my watch list on my own account where, and then of course we have a S&P 500 because this is, I really wanted to go through it. If I want to invest in S&P 500 companies and I want to look at, okay, let me look at how well they score on my framework of quality. I need to see this, right? I'm happy that at least this is now in place. So that's a one. Watch list is not yet enabled. So if you log into your account, it's not yet enabled, but for you. But in this week, I will be enabling it. I'm still testing out some other stuff in it. Okay.
So Vivi, you know, I'm an options trader, right? It'd be nice for you to incorporate some dark pool information in there, unusual trades.
Like you, I've been on option trader for almost 10 years now. I've never made use of dark pool trades. But sure. Right now, I will add into the backlog. Right now, I have 83 items in my backlog. I will add into the backlog trying to incorporate dark pool trades. If the service provider has it, great. But right now, I'm just
Thinkorswim has the trade flash, right? But not sure how to get that off that, right? So
no. So if let me figure out. At least I'll add it to the backlog. But I haven't looked at it, dark pools. And when I started to build this, it was, hey, what helps me to become a better investor? And there are still a lot of stuff that I need to add to it.
yeah.
Okay.
All right. Thanks.
Two other things we did was on a stock overview page. If you see now, this, like, I got frustrated every time I go to a page. I want to go and run the valuation on the DCF side, reverse DCF, and I have to scroll all the way down. So I'm like, let's add this so that it'll take me here, and then I can, you know, run the calculations or whatever. Not a big change, but at least easier to navigate, right? What other changes are done? Analyst estimates. Yeah, I forgot to tell that. Now, if you're running your DCF, oops, and if you're running your okay, so DCF will not be even applicable because this is which company? We are looking at PMY. They didn't have last trailing 12 months of positive cash flow. Oh no. So earlier we did not have analyst 5-year estimate. So for me to just get a sense of, you know, trying to look at expected free cash flow growth now becomes much easier to see what the analysts are thinking about it, and then you can plug in your number, right? So I did. So with this week, was it this week or last week? No, last week I was mostly traveling. So this week we added the analyst future estimates as well. We want to look into the details of insider. You can get through the details of insiders that wasn't there earlier, but now you can go and say, you know, who bought, who sold. You want to look at how many buys happen, how many sells happen, probably very few buys, and, you know, go and knock yourself out. I just look at the summary and that's good enough for me. But if you are interested in the details, that is available. Business metrics are now available as a part of the financials. Below the financials, you can see, you know, the different segments. This is, of course, this is a Bristol Myers. I have no idea what these things even mean. That's why I don't invest in healthcare or pharma companies. But now I have a business metrics details.
Why don't you look at JP Morgan, JPM?
You don't find any better companies. Like the financials companies are the worst one.
Well, then pick something. Then you know something. Then pick something.
It's very difficult to analyze the balance sheet of financial companies. You don't know. That's why I don't own any financial.
Pick something you know, so we can go through your stuff.
I mean, you can look at NVIDIA, right? That's why I love NVIDIA. Like it's a great business to own. And for now, at least on the free cash flow perspective, to me, and this is what I was looking just before our meeting. I was looking at currently the market is pricing in 16% free cash flow growth for the next 10 years, and then terminal growth rate is 3%. You discount all the future cash flows to the present value, taking 10% as a discount rate. That's essentially your intrinsic value is, right? Plain one-on-one discounted cash flow stuff. Analysts are expecting that they're going to grow the revenue by 26% and EPS by 22%. I'm like, okay, let's say, and I can go back and look at what their earnings to free cash flow conversion is. Let's go back to quality. If I see how they've been converting their earnings into free cash flow, let's say 70 to 85% of the earnings is converted to free cash flow, right? So I'm saying, okay, instead of 22%, take 80%, let's say 18% is the free cash flow expected growth for the next 10 years. That the stock intrinsic value is 217. To me, this looks to be undervalued. I would rather sell a put on this one than on some of the other stocks. Right? Or if you think the last 5 years, they've been growing their free cash flow by 83%. And if you think they will continue to do at least 20%, 25%, run your numbers. Right? But if you're more of a pricing guy, you want to look at a PE, PS, and price or free cash flow and the multiples, you run these numbers here. And then you decide what you want to own or not, right? Okay, let's get back to the business side, right? Okay, so this is what NVIDIA, right? So again, you want to look at NVIDIA, how the data center has been doing. Love this chart, right? Look at the growth in the data center revenue that is driving all the valuation on NVIDIA. So look at, or you can look at a percent overall, 90% of their which one it says 2.9. Okay, so I only have a data center selected here, that's it. But you can look at a mix or by numbers, etc. Anyway, spend time on it. I'll just move on. Few other things. Trade analysis made some change, and I love this because I hope all of you will like this. This is for you to know how you have done on across all these years on a particular ticker, right? So no, and I was actually looking at the number. When I'll get to the moonshots bet, you will see some screenshots, right? So again, test data for last whatever 20, 22, 24. I want to see, pick up a number. Meta. Okay. I want to see the impact of Meta on option trades over all the years. What I've done on Meta, right? So it'll give me overall picture. Earlier, we did not have a ability to drill down at a ticker level. Now you can drill down at a ticker level and see how your option trades, or if you want to look at a stock trades only, or if you want to look at all, right? You can do those selections. And yeah, okay, pretty good on a Meta, right? 2022, $900 on Meta premium. This year, not that great. You can run into these numbers and see how these things are performed. You want to dig into particular month and see what the heck happened, or why on August 2024 or 2025, what contributed to these gains. You can get into details of those trades, right? It'll tell you which trades contributed to these things. So I was super excited to get the ticker level information across also. Okay, so I already had an example of Meta out here. Other stuff was when you're trying to close your trades, or this is the screen which I open up on daily basis and look when I have my trades that are open. And I want to look at, okay, these trades are open. I want to put a GTC closing trade, or let's say July. but I also want to pay specific attention to the trades that have earnings before the expiration. There was no way to get that indication here. Now I actually know TSM is reporting earnings on 16th of July, and this trade is expiring on TSM expiring on 17th, right? So there could be more volatile. Again, little more information for you to help right in this screen so that you know, hey, might as well close the trade, do whatever you want to, roll it out, close at a lower than your normal profit targets, stuff like that. What else? What other updates? These are minor updates. Okay. I think earlier I had a T+0, T+1, so I just made it to June, July, August. Yeah, these are some of the improvements. I think the two biggest one that I found most useful is getting the watch list in and getting a ticker level information across the all history of your trading. So in my own account, I have a data from 2016 onwards. So almost last 10 years of data. And now I can look at a particular stock and see how that has worked over the last 10 years.
So say, for example, if I want to compare Intel, AMD, and NVIDIA, can you do that?
In terms of compare for what?
From your fundamental, from the charting.
Yeah, so you create a watch list. You create a watch list of those three. I mean, and you can see how do these compare, right? So if you want to do a, let's get back to watch list. Do I have any watch? Okay, watch list.
I mean, you're building a lot of things, which is awesome right here. But I'm saying, so say, for example, to say, hey, I'm interested in Intel, AMD, and NVIDIA. Based on your analysis right here, would it give you a high rating and say, hey, which of this would you recommend right here, right?
Okay, first of all, there's no recommendation, but you will know what each of the quality score is, what their valuation numbers are, right? Now, better, which one you should buy, again, depends on what kind of investor you are, right? Some investor may want to look at the previous performance and say, okay, I'm a momentum guy. The things that have worked in past, I just want to be in it. You're gonna go and buy Intel, right? I'm not a momentum guy. I might want to look at the valuation, or I might want to look at the quality of a business, right? So I make a decision. Those will be separate decisions, but you have the information available to compare.
So I guess what I'm getting at right here was, I mean, NVIDIA has been king all along, right? And then come along somewhere, it says, oh yeah, we're falling to CPUs now because that's better for processing, right? So things like that are gonna change, as per technology, right?
Correct. Those are the future narratives. Yes.
Yeah, I mean, last time I looked at it, AMD was what, 200? Now it's 500 something, right? So it's just like how quickly things change, right? So
you are talking about the stock performance. Stock performance, all websites will give you. I mean, you can compare on a Google itself. I'm more focused on the numbers or on the business side. Right?
okay.
Is this who's this, Dave?
Yeah, is this Rajiv?
Yeah, so here's my humble analysis on this. I've tried to build models for years. What basically happens is that every few months, the kind of factor on which the market is emphasizing jumping into changes. And I think the challenge then for us traders, like you're asking a question as to why AMD doubled and NVIDIA just stayed there in the preceding 3 months. What you have to, at least I'm going to develop, and I have developed basically regression model which tries to infer which is out of these various factors is what drove it. So in my kind of casual analysis, what was driving this jump for AMD and not for NVIDIA was the low peg ratio. So the peg ratio was being emphasized for several months, but last couple of months it was momentum and not peg. So we basically need to figure out what is the market emphasizing.
So now has the market moved towards?
That's a quantitative analyst view of the world.
So has the market now moved
and
towards
it is
the
definitely
low peg companies?
Sorry?
Has the market now moved towards buying low peg companies?
No, as of the last couple of weeks, what has changed is that it's basically rotating. Money is rotated out and continuing to rotate into what was neglected for previous 12 months.
Yeah, that's
So
true.
money
But
is moving.
those are not
So again,
necessarily.
there can be we can find out the factor for that, and the factor would probably be the capitalization. Small caps and medium caps are being emphasized as of last few months.
You can see that in the performance of IWM.
Right. So what I'm trying to say, Vivek, is that while all this analysis is good, what just like John is saying, what we need to figure out is because I think interest is to make money in investing, right? So just because there's a static analysis which shows, hey, this was the blah blah for ROIC, it doesn't matter because we can't make any investable decisions out of it. So we need to figure out how to compare and decide when to pull the trigger.
Hey, Raju, what ratio you are referring to?
PE to growth ratio. So that's basically balancing the valuation with the expected growth of the company. So actually the classic example right now is Micron. It is still very undervalued. What basically saying is they're expected to grow their revenues and earnings. Actually, it stands for earnings much more than basically its PE is. So
So
basically,
hold on.
you take the
Yeah. So I'll let you get into the details of PEG once we get into the section of our investing terms, because one part of those investing terms is our valuation or pricing terms, and we'll get into details of, okay, what does PEG mean, what's price to book means, what's price to earnings means.
And which class of stocks does it apply to more also? Because it's also important that price to book cannot be used reliably for certain companies.
Yeah,
Anyway, I'm gonna shut up now.
yeah. But let's hold on for a minute. We'll get into some of the detail, some of those investing terms, and let's discuss more. I think I've brought in maybe 15-20 terms, and we can add more into our discussions. Corey says, does Optalyzer work on Canadian stocks? I only I'm looking at the stocks that are listed and traded on US exchanges. Let's say Shopify is a Canadian based company, but it trades on the US exchanges. So I do get data for that. But if there is a stock that trade only on TSX, no, then I have data for it.
Okay.
Andrew is asking, can you calculate correlation between stocks in the watch list? Share what's the use case you're looking at, Andrew? What's the use case that you have in mind? How will that help you as a investor / trader?
Hey, I guess more like for diversification. For example, if stocks are highly correlated, you're essentially investing in one stock, right? If like two stocks are highly correlated.
So then,
that's kind of.
Yeah, I think I don't have that data. I don't know, because trying to do N-to-N correlation, that's where the problem. You can always find out the correlation with either S&P or a particular market index or one particular ticker. But what you're looking for, correlation among end-to-end, I don't think any, at least I don't know how to get that done. I think there's a website where you can put in multiple tickers and it will show you a nice table of how the correlation is. But I don't think I have a data available with me to get that correlation.
Okay.
Let me see if I can find out that website. I remember using that in the past. How about using margin account to trade stock? If you understand the risk parameters and stay within those, you get a margin by default margin enabled, at least on the US, if you have more than $25,000 in your account. Now, whether you use it or not, it's entirely up to you. I don't even think about margin, whether I'm using margin or not. In some, and in some cases I maybe because the cash value is negative, it means I kind of borrowed because maybe a put got assigned and then I had to spend the cash in my account to buy the shares, and I really don't want to sell it right now. Yeah, but then I'm using basically margin money from my broker. But overall, if you still have a lot of a buying power left in your account, who cares? I generally would focus on how much of the total buying power that is available to me, how much I'm using that capacity. Some of them could be based on like I might have had some cash on margin, but then my portfolio also provides me that buying power. So I look at the overall capacity and then make a decision. But this is I would say it's a double-edged sword. You need to understand what kind of investor you are and stay within the risk parameters. I have a very strict rules on how much borrowing capability or how much buying power, not borrowing, but how much buying power capacity am I gonna use at any given part of a time? What's the max that I will stay with? And that has helped me to go through COVID crashes, go through 2022 drawdowns, 2018 December crash, without ever getting a margin call. And you guys know, I'm option seller, which is a higher risk trade, but that's where you have a more propensity to make more money. So I always sell options, but then you run a risk of getting margin calls if you are not careful enough about your risk parameters. So as long as you do not basically lever up or stay within the confines of your capacity, I'm okay with it. But if you're new to investing, don't do it because you haven't yet figured out your capacity to bear the risk. If you have not gone through at least one crash, then tread with caution.
Are you using what percentage? 30%, 20%?
Generally, no. So generally, I'll be around 30% of around 30%, 35% of my buying power. And when the market crashes, I think in the COVID was the only time when I'd seen it gone up to 60%, 65%.
Yeah, I'm a little more. I'm using about 50% of my margin right now.
No, I don't want to, because I sell naked options, and if the market suddenly corrects 30%, those buying power will just will get consumed. So that's why I want to stay around 30-35%. Right. On the market sentiment, now it's fun in the market. I love when the market is on extreme fear, because that's where I want to go out and start shopping. Otherwise, I have to wait for the market, froth to go out. I cannot build my positions, right? Full portfolio position if the market always stays in green. So I'm looking at now it will be a good time to start, putting some of the bullish trades if it continues to stay in the extreme fear. It is very difficult to do it when the market is extreme fear for you to take contrarian approach. But again, with the time you have to build that I'd say stomach to become bullish when everyone is bearish. Right? So this week I just start to add some of more, try to keep little more positive deltas, because I saw market is now moving towards extreme fear. From a sector performance perspective, healthcare this week has been great, and tech has been down almost close to 4%. Right? Overall, for year to date, S&P is up 7.5%. I should have sorted this in the performance wise, but industrials, no, energy is up 20%. Of course, no surprises here. And then we see industrial 16%. These are all AI adjacent trade on industrials, right? Then tech sector had recovered 14%. But It's okay. Not bad, man. 7% not bad for 6 months. You're about to finish second quarter, and I'll take it any year. I'll take this like 7% in 6 months. Not bad, not bad. So what the buys and the sells that happened not this week, but since our last meeting. Again, no recommendations here. I just want to be transparent because we talk about a lot of stocks. What did I buy or sell? Palantir had a short put that got assigned. I like Palantir at I don't love it at this price, but it's okay. Now I can start selling covered calls again on it. I still hold some shares from my $7 buy. Those like a gambling chips. And Ford, you guys know I talked about Ford earlier also, after they pivoted from their from their EV decision. The only reason I own Ford and GM wanted to them, along with the Tesla, I wanted to have other players who are in EV. Both the companies decided not to stay in EV. So then my thesis has been changed. And I've been selling calls on Ford for many months. It never got assigned. Finally, it got assigned on the June 18th one. So those stocks are out. I had a short call, covered call on BlackBerry that got assigned. We'll talk about this. I sold it.
Just out of curiosity, when you sell Ford cover calls, you never got assigned because you're not selling at the money, you're selling out the money?
No, Ford was, so again, I go and I think I shared the trade. So for Ford, I did closer to money. I think it was $13 or $14, right? Now I will pick up how close I want to go based on what's the objective of my trade is, right? If it is only income generation, I will go and sell 16 delta or 20 deltas. If it is, yeah, I just don't want to own the stock anymore, but I don't want to sell it at the current price. Maybe, get paid while you're waiting. Maybe then I'll do an ATM or close to ATM covered call. So Ford was close to ATM covered call.
Oh, okay.
Right. But many of the other trades that I've done, I'll do 20 delta, just 30 delta. Hey, that's my main objective. There is to either do a little bit of hedging or to get an income, right? I still love the stock. So I don't want it to be immediately called away.
And I see your ICSH, you talked about, what is that, SCHD before. So is ICSH the same as dividend or is that a different way?
ICSH is where I park the cash because it gives you dividend.
Give you monthly dividends, right?
4% or something. Yeah, it's little higher than the T-bill because it's got a T-bill plus corporate bonds in it.
But you talk about SCHD that you also hold it for dividends too, right?
I don't hold SCSD for dividends, even though it is a dividend ETF. I hold it.
You hold for long term.
Because it's got companies that give me diversification, and those companies are, by definition, they provide dividend, means they are good cash flow generation companies.
Oh, I see. Okay.
So SCSD will provide me a balance in the portfolio when the growth companies are freaking out. Over the years, that's what I've seen. Okay. So when the growth companies or all the degenerators freak out, SCSD provides some balance to the portfolio. So now SCSD, I think maybe next week I'll share it'll be end of a month. I'll share the overall portfolio, top 15. As of Friday, SCSD is like number 2 or number 3 in my portfolio because that's performed while some of the other Max 7s have not this year.
Yeah, I'm also holding that too. Yeah, SCHD.
Yeah, I'll hold it all. There's I'll hold it for next 20, 30 years. Right?
Okay, that's fair.
Yeah. Okay, another one. Lessons from the moonshot bets. And the reason I want to talk about this is it's more at a portfolio construction level in terms of, again, no recommendation, but this is how I construct my portfolio is core portfolio, growth portfolio, and moonshot portfolio. Moonshot portfolio helps me to scratch my venture capitalist or angel investing itch, right? I don't do angel investing on private companies because hey, I can do it on a public companies through my moonshot bets. These are the bets which, if it works out, could become 10x or 100x, but there's an equal amount of possibility that it could go to 0, right? So, okay, I always on, I think I've not enabled that yet, but yeah, I'm still working on this one. On Optalyzer, where did I have a breakup of how much is your percent portfolio is? Is it here? Yeah. Okay, so once I enable this, you should be able to see how much is moonshot, how much is core, how much is the growth, right? So at the end of it, my general target is 60 to 70% of my portfolio should be in the core side, means ETFs or good cash flow generating companies. 30%, like 25 to 35% should be in a growth company. Those are the future leaders, right? Sure, they won't score great on the current quality framework, but there is a story that I can think about in future, that there is hey, the market is going to be bigger, or they are working in an area which is going to grow in future, right? So those are my growth bets. Moonshot is like go to 0 or go become 50x or 100x. So lesson from 2 moonshots, right? So I had a BlackBerry. It's up almost 200% year to date. Look at a 5-year performance. It has just barely met its 5-year performance.
Hey, let me ask you a question about how you taking this into moonshots right here. So when you look at the moonshots, what are the fundamentals you're looking at?
No, moonshot I'm looking at is that, hey, for example, let's talk about this, right? So I'm talking about 2 moonshots and completely 2 different performance criteria. BlackBerry, I got into BlackBerry. I thought I got into BlackBerry in 2019 because that's what I remember. After they did a Silence acquisition, is guys, they're gonna get into cybersecurity, and cybersecurity will be a growth engine for future. That's why I bought BlackBerry in 2019. Okay, prior to that, it was a smartphone play and got decimated by Apple. So I had no interest in that. But once they acquired Silence, I got interested in it.
But do you look at the free cash flow? If it's negative,
no,
or just
so no, if it's a moonshot, means sometimes the company may not even have a product.
That's
right?
what I'm saying.
No, moonshot.
it's a risk,
moonshot
right?
is your angel investing, right?
Okay.
Forget about any of the metrics of the past. These companies probably will be like 2 or 3 or maybe 1 on the quality framework metrics, because that's look at how great business we built in the past. Moonshot is all about future. It's an angel investing. And my idea was that now they are getting into cybersecurity. Okay, I want to get an exposure to it. Waited, I think I bought it at $5.50, and the stock is still didn't do much for many, many years, right? And I watched the business. They went through some strategic turnarounds, changed the management a couple of times. New CEO took a decision to undo the Silence acquisition. It was done in, I think, 2024 December. They sold off Silence. It was a high growth. Cybersecurity for them was a high growth, low margin business, right? And over this period of a time, all I did was to hold this for longer time. I continued to sell options and covered calls against it to reduce my cost basis. That's all I did.
Okay.
This quarter, for the first time in 9 years, they got first positive operating cash flow positive after 9 years. And like a stock was up like 20%, then on the next day it was up 10% and all that stuff. Right? They pivoted, and I don't want to get into BlackBerry itself because not many of you might be owning it, but now they've become very focused on 2 core businesses where they are strong, and say, you know what, forget about all the growth stuff. We want to focus on the business where we can make money. And now the market is now started to look at it and say, okay, now you've done completed this turnaround. Maybe we'll basically reward you with the increase in share price, right? But so this is where I was looking at my BlackBerry. Like I said, I have data from 2017. And then I realized maybe I did some trade in 2017. I thought I only dealt it in 2019 until I looked into Optalyzer. So maybe this is an option premium over the last 10 years. I've recovered all the investment that I had done. So for me, it's been a house money. I still own all the shares, and it becomes much easier to hold the shares while you're waiting for the stocks to perform. All right, look at last 5 years. It has done nothing but only reason I was able to hold the stock is, dude, I continue to reduce my cost basis. Eventually, if it doesn't recover, it's a moonshot bet, it goes to zero. It's okay. I recover all my money in an option premium anyway. So that's why I'm big on options and try to use it in managing my portfolio, which is very antithesis if you look from a value or a long-term investors. Went to Berkshire Hathaway meeting and talk about options, you raise some of the eyebrows. But then when I tell you why and how I use it, it helps me to stay in the game for very, very long term. Right? BlackBerry is one example. Again,
how about Nokia? Do you think it's a potential moonshot opportunity?
Nokia could be. I've not looked at Nokia. I know
Okay.
Nokia turned around its business. Now the stock is also rewarded, but I've not looked at Nokia.
Okay.
Okay, you need to look at the business and then see you want to take a position or not. Right? So another one that I had, and I talked about this company, reviewed its S1 and quarterly earnings and the tech, is Nanox. Again, Nanox is in a medical device field trying to create they have a machine which will basically take an X-ray or X-ray equivalent tomography at a very lower cost, right? So it's all about future. They did not even have a product when I invested in it. Did not have a saleable product. They had a prototype when I bought stock of Nanox, and I've been selling option premium on this against my position. But while BlackBerry has recovered and the stock has performed, this stock is down almost, it's down like 90% from its all-time high. Right? And after earnings, the stock was down, say, 50%. Again, the lesson here is, if this was a big portion of my portfolio, I would be crying river. It's not a happy situation when you own a stock that is down 50%. But hey, guys, it's a moonshot bet. Expect it to go down 100% and size your portfolio accordingly. I am glad that it was a very incy tiny bit of my portfolio. Right? I'll still hold it. Maybe they'll turn their business around. I'm not going into the details of it, but just one sec. But management came and told that they have a substantial doubt about it as a going concern. Means basically all they're saying is we're probably going to run out of money because the prototype that we had, and then they've been running as a test machines on some hospitals. One hospital in Israel, couple of hospitals in US. They had signed up agreement with a lot of manufacturers. I think Foxconn is one of them, to manufacture the machines, but the delays are happening. They got a FDA approval in US as of last quarter. I've not looked at the detailed report for this quarter. As of last quarter, they were still waiting for CE trademark approval from European authority. They have approval on Latin America, but setting a business is hard, especially when you're trying to address the healthcare sector. That's why I don't invest on big on healthcare, right? But you run out of money.
So my question for you is on the option side, right? When you sell, you say you sell some cover calls, right? But I don't know what your cost is, but assuming it's a little higher than $1 right here.
Yeah.
And your purpose right here is not for your stock to call away, so which means you're selling out the money cover calls, right?
Yes.
And since there are options, would you say it's better to buy lead call?
Now at this point of a time, if you sell options, there's nothing much of a premium to begin. The stock is $1 now.
I know, there's nothing.
Yeah, there's nothing. So I'm not now. There is no point on me trying to sell any. I don't think I've sold much of options after it was like below $5 or something.
Okay.
I don't recall, but maybe I think I have a chart for that as well. So when was the last option I sold? 2025. I never sold any options on it since then. because the stock was down. There is not much of a premium to be gathered.
But
But I'm
would it be
glad-
better to just buy the leap long calls as a bet?
Yeah, now you could. Now you could.
Oh, okay.
But again, I think the lesson here is when you're doing these moonshot bets, right? Position sizing is the most important factor. You don't know, and the same is the case on when you're trying to do angel investing. And unfortunately, I know some friends who will do angel investing or in private investing, and then they'll put 10% of your portfolio in there. Go ahead, knock yourself out.
I have one. It's
But-
in a
but-
similar trend right here.
but-
WVE.
But make sure it's a small part of your portfolio and spread your bets across multiple such companies. The reason why I don't do angel investing, not yet, is I want to do angel investing only if I can spread my bets across at least 25. I would be comfortable if I spread my bet across 50 companies. It
Mhm.
means I need to grow the angel portion of my portfolio. The overall portfolio is so big that 5% can be allocated to 50 companies, right? I'm not there yet. If I was there, I'll be sitting on an island anyway. So jokes apart, this is another lesson saying if you're doing these moonshot bets or angel or, small allocation is good enough. If the stock becomes 10x, right? Small allocation will help. That will be good for you. If the stock becomes 0, you'll be thankful that you only had a small allocation. So anytime when you take these moonshot bets, make sure that overall portfolio allocated to the moonshot bets is within your risk limits. And that's one reason when I was trying to build this Optalyzer, I said, hey, I want to know, and I'll allocate each one of my investment and tell him it's a growth, it's a moonshot. What? So BlackBerry is a moonshot, BYDDY is a moonshot. You can mark these as moonshots and all that stuff, whichever way. Right? And then when you look at your overall analytics, it will tell you overall, again, like just a demo one. So let's go down. Keep an eye on what's the overall portfolio is. Now it says, okay, based on this, the moonshot at 5.6%. If I look at the real account, I've always tried to keep my moonshot bets close to 5%. It means if every bet in that investment goes down to 0, sure, I'll be hurt, but at least 95% is secure. Position sizing is very, very, very important when you're trying to take these moonshot bets. I don't care how promising the business sounds. I don't care that the CEO is your close friend for last 30 years. I don't care if you are the owner of that. But you never know what future. That's one big lesson I learned this week, and I was glad that, hey, it was a small portion, right? And I continue to keep it as a small portion. From a tale of 2 moonshot bets, both going in opposite directions, right? All right, any other questions?
So I remember Kay, right? I think back in COVID, right? He's got his Sunday sessions, right? I think he said he was an angel investor in 10 companies where he threw like 100,000 each in each one of them, right? So
but he was not investing his own money, right? That's a
I think so, yeah.
No, dude, investing other people's money, you'll bring down your guard very low, right? And I used to attend Kay's meeting. I think in 2021, couple of meetings, he told that you should mortgage your house and take a loan and invest in stock market. After that, I stopped attending his meeting because that doesn't gel with my investment style.
I see.
I hope people didn't follow him. You are taking mortgage on your house.
No, I stopped going to his sessions for a long time now.
Yeah. So okay. Again, he's not gone through. Oh, let's not talk about other person. Most of the people don't know. But that's the reason I stopped attending that one. Murali asked, what ranges buying power and borrowing power risk envelopes are recommended for different. So Murali, I don't think there is one answer for it. But let's say if you're only doing cash secured stuff, right? Then you can go to 60%, 70%, keep 30% to take advantage when the market crashes for no reasons, like we had a yen carry trade blow up, right? which doesn't impact, let's say, Max 7 companies because they have nothing to do in Japan. So you can keep that 30% to take advantage of those dislocations that happen in market. But if you are doing undefined risk trades, like especially on the selling side, like I do, then if the market crashes like it did on, not crash, like 5% on is not a crash, but let's say COVID, when it went down 32%, you will see your buying power being exploded. And if you are already consuming 60 to 70%, you'll be, your phone will be ringing off the hook, getting margin calls. So based on the kind of a trades I do, because I do naked option selling, I want to stay around 30 to 40%. If the market crashed, buying power consumption will expand, and I don't want to, be in a situation where I get margin called.
But Vivek, I think you said in not here, but in Discord that you're mostly delta neutral, right?
Not mostly delta neutral. I said some trades I do as a delta. I'm delta positive.
Okay, that makes sense. Okay.
I change my deltas based on, or try to, again, over the years, I figured out at this market level, this is the delta I'm comfortable to hold. And then I'll do delta negative trades or delta positive trades. So right now, because this is my only source of paying bills, ever since I left my job and try to, try this new stuff. Not new, but obviously, right? You do it for 10 years along with the job, then you get confidence. I'm like, okay, I have to generate cash, right? To cash flow to pay the bills. That's why sometimes I will do delta neutral trades, in which the whole sole purpose is just to generate income.
Yeah, dude, just throw $1 million in ICSH or SGov, right? That's your monthly income right there, right? $10,000.
But then there is no fun. You also want to enjoy the process.
Dude, your fun is from developing the system you got right here, which is
I want to get away with this. I want to get back to my reading books and all that. This is because I am moving away from all other Google Sheets and Excel sheets I had, and put everything in here. But I want to go back to reading and analyzing companies. But yeah, last 2 months I've been extremely busy on these things. Okay, market down 3%. Extreme fear is funny. Extreme fear, all those numbers are based on 7 parameters that CNN tracks. And that's the reason why it shows up as under extreme fear. Sean says very bullish on BlackBerry over next 1 to 2 years. Now, after the change in the business, now I am. So I'm not selling covered call just now, because now I'm in a coffee can positions. Glad that we implemented, or at least I implemented coffee can Optalyzer, which tells me don't sell more covered calls because it's already at a coffee can position. So I don't have any other more covered calls on BlackBerry. After my coffee can position was reached, I did not sell anything. She's talking about diagonal. Dave's okay. Moon is an ETF seeking moonshot tech innovation company. Wow, I never knew about this. So let's look at Moon ETF. Hold on. I think, let me just, shortcut is not there on ETF. Moon. Come on. There we go. Directional. They will always come up with these hot sauce ETFs. 0.65 expense ratio. That what kills me. Let's look at their holdings. Lucid, Sentinel-1, Roku, Upstart. Sure, you want to take a bets on this? By the way, Roku is now taken over by Fox, or the deal has not closed, but they are selling themselves to Fox. All right, last big topic that I want to talk about is on crypto. How many of you own? I know some you mentioned that you have invested in BTC. How many of you own MicroStrategy instruments? I can't say just stock because they got a lot of stuff. And we talked about MSTR, MSTU. You brought in, why don't you own this stuff? Any owners of my MSTR?
Are you shorting it?
Don says I sold MSTR at 500. I've been taking myself. And I know some astute investor I used to follow. You might have heard name. He also was like co-founder of the Investing podcast. Doesn't ETF everything on Moonshot defeats its Moonshot purpose? Okay. You can debate on that one. So
I own Moonshot. I'm sorry. I own MSTR.
MSTR. Not a pretty position to own MSTR. I never owned MSTR because I'm bullish on the Bitcoin on a 20-year time horizon, but I don't want to put a company specific risk on Bitcoin, right? So I own Bitcoin ETFs in my portfolio. I just want direct 1:1 exposure to how Bitcoin performs. But MSTR and then MicroStrategy, it is now Strategy, have been selling a lot of other instruments. The most, I would say, talked about, and the AUM is under an instrument called STRC, which is called Stretch. So Stretch is basically, and if you go and listen to Michael Saylor's interviews, he basically saying, hey, we will strip out the volatility, the Bitcoin volatility, and will give you dividend-like returns. This is a preferred instrument, and with the 11.5% return, right? So in April, it said it will deliver money market-like stability with market-leading risk-adjusted returns. Right? I think some part of a time he also said money market-like stability with market-like returns. Right? At the end of the day, I'm gonna say there is no free lunch in this market. If you do not understand what the risk is, if the risk is not apparent, it means we haven't done our homework correctly. There is no free lunch. Sometimes the risk will come from the areas that you have never thought about. Right. So I never invested on STRC, even at 11.5% return. If you go, I used to get into and listen to the earnings call of Michael Saylor. The amount of financial engineering and the instruments that are developed is mind-boggling, right? And the whole company is business model is to basically generate some what they call it a digital credit, right? Backed by Bitcoin. And then obviously there are, I basically created one document which is overall on financial engineering of Michael Saylor. I wanted to understand what is that doing. I'm still can't wrap my head around on how exactly they're doing it, and why is it great for these investors. So that I've never bought MSTR or any of these. But if it seems too good to be true, it was. So right now you look at 2026 total returns. This is from Charlie below. I mean, you can look at the STRC return on Think or Simone or any of these. It was down like 8% as of 6/23. And I think after that, it has gone further down. It is supposed to be pegged at $100. So STRC is a preferred shares, will give 11.5% dividend. I don't think that it's that they are legally, they have to give a dividend. Hold on, let me look at STRC. Oh, there's my big document on the financial engineering, STRC. November convert. No. Yeah, these were the preferred equity. They pivoted to preferred equity and then created the whole STRC, which is like 11 point. Okay, so perpetual preferred stock, 15.5 billion in STRC, STRE, STRK.
They don't have to give dividends. They can just back out and say we're not giving it.
Yeah, no, but there are a few instruments in which the dividend is cumulative. There
Yeah.
are a few in which it is non-cumulative. And some they are legal. They have to. They're legal.
Cumulative meaning what?
Okay, there it is. I think STRC we are looking right. It's not a legal obligation, but it will accrue cumulatively. Okay. In any case, it is supposed to stay at 100, and the whole idea was that if it defects from 100, it will strategy will increase the dividend rate, adjust the dividend rate to attract more investors into it, which will push up the price, get pegged back to 100. Right now,
6% with JP Morgan and Bank of America, much more better, a ton of more risk.
STRC, it has depegged from 100 to now all the way to 70. Now, even so, then they moved from doing a monthly dividend to bi-weekly dividend. I think the first set of bi-weekly dividend is supposed to go out sometime next week or week after that. And now the decision on whether to further increase the interest rate, also the dividend rate has to be taken, right? I don't know. Now, imagine the retirees who put in their money because they got enticed by 11.5% return with money market like volatility. This is like a meme stock like volatility. Right? So if you did not understand where the risk lies, if it is risk is not apparent, doesn't mean risk does not exist. 11.5%, any time any company comes and say that we're going to give you more than the US treasuries, there is some risk involved somewhere. Unless you understand that, take it with a pinch of salt. That's the only lesson. We have seen this story time and again, right? In which companies will offer you 8%. There is no rate. Like we saw private credit blew up. Private credit will be okay. You can make 7 to 8% on these. A lot of these covered call based ETFs, they blew up because they promised 7-8%. But then you lost a lot more on the capital side. At least that portion I understand how that behaves. I just did not understand how this STRC and behave and all that stuff. Right? Maybe they'll recover. There are news in the market that they'll have to sell the Bitcoin, which will basically push down the prices of Bitcoin, and the whole valuation of the company is based on Bitcoin. There are doom and gloom predictions happening around strategy that it is going to be a next Luna. Those who have been in the space for a few years would remember 2022 Terra Luna collapse, and it took down a few hedge funds, 3 Arrow Capital and a few others along with it. We'll see.
I put my money on that. Basically, I would be short MicroStrategy because it's a leverage play on down moves on Bitcoin. That means if Bitcoin goes down even 20%, the damn company is going to be wiped out.
But over the last 5 years, so far it's still, if you're invested in MSTR over the last 5 years, you're still up around 50%. But man, it was around $500 some part of a time. And here's another thing I want to tell you. Do not trade based on anyone that you hear anywhere. Not in this Saturday meeting. Don't go and buy a stock because I talked about it, or Rajiv or Sean or anyone else talked about it. Always do your own homework. I can't tell you how many times the investor that I've respected, whose podcast I've followed for years, have blown their accounts. Everyone at some part of a time have a weak point where they'll go too big on their positions. How many of you hear the investing podcast? Anyone? It's a good podcast. Still like it. I like some of the hosts. But when the Bitcoin in 2021 wave came in, Preston Pish, huge Bitcoin advocate, started a series on Wednesdays, which will be Bitcoin fundamentals. And I used to listen to Preston Pish. I think he became more famous when he maybe 10 years ago or 12 years ago. He basically was a value investor, looked into all the Berkshire Hathaway and created a series of YouTube videos on focus on value investing. Then, of course, the business took off, the investing podcast and all that stuff. In 2023 or 4, or when all these MSTR stuff was coming out, he gone big on MSTR. Now I could wrap my head around it. Preston Pacious understand this space, a crypto space. He's been in the crypto space for so long. Why is taking MSTR and not directly Bitcoin exposure? He had his own thesis, talked a lot about it. Now I was wondering, when I went to Berkshire Hathaway, I spoke to the TIP guys, and I'm like, why don't see Preston on any of these podcasts or YouTube's anywhere? What happened to the Wednesday Bitcoin Fundamentals episode? I don't see that anymore over the last many months. Now, Preston has disappeared from Twitter. He's disappeared from YouTube. He's disappeared from podcast. Now, I could guess that astute investors sometimes get too big. Same lesson, don't go too big in any of your positions. And I distinctly remember him talking about it, that he's a big buyer of MSTR, anything under 400, 300. Even great investors make mistake. What scares me is always my position sizing is, what if any of the company I own, I don't get, it's Google, it could be anything, could just blow up. On Twitter, I've seen many others like with $500,000 followers disappearing for 2 years because they were big. 3 biggest position was, some of you might know if you are on Twitter, right? PayPal, Intel, and Snapchat. Intel has now recovered over the last 1 year, but that person had like more than 500K followers on Twitter in 2021. Sorry, not 2021, 2022, 2023. Went big on these. Got decimated. So do not, never ever buy anything based on what you hear in any of the meetings. You never know where even the great investors have made a mistake. Everyone is fallible. And you will never know it immediately. Investing is only one game in which you don't know the quality of the player unless a longer period, right? I get into the basketball ground, you'll figure out in 5 minutes that how poor a player I am.
This is why I think you have to, at least I'll ask for and look for their returns, what they're demonstrated and kind of verifiable returns to their signals. Anytime somebody is like hawking stuff or talking about stuff, but is not able to show his performance, is like suspect. So that's where, all this Twitter sphere and all, I think it encouraged too much of noise making and very little of verifiable signal tracking. How well the guy performed.
And I'm not even talking about that, like investor like Preston Prish was selling anything. He's been in this Bitcoin space since 2011 or 2012.
So their incentive was just to make noise and get noticed, because that was the era of the last 15 years, which is going to go away, which was basically get lots more visibility with the social media boom. But social media companies and the whole importance of it will go away, started going away in the last 1 year. Believe me, that whole world has ended. But anyway, that's not true.
And now with the Twitter and all the social media, the difference between investor and the content creator is like collapsing. You never know, is the guy a content creator or is the guy an investor? The content creator has a different motive. They want to increase the audience. They make money through that purpose, not really
ads.
And investor has got a different motive. So, but with social media, it is blended. So, I listen to a lot of people. Don't get me wrong, I listen to a lot of people, but then I always realize he is a content creator. He's not an investor. So take the information, but not his judgment. his or her judgment, right? I listen to it because these content creators are great in giving you concise information on the markets and all that, but I'll discard everything from the judgment perspective. Use your own judgment.
Good point.
You should use your judgment, get the content, right? And again, do not follow any investor, irrespective of whatever they have done. Monish Pabrai, right, held Micron for many, many years and sold it just before Micron took off, right?
So how has Monish performance been over 20 years? Can you just tell me one sentence, 0 or minus?
The problem, no, it's not 0. I mean, he's done okay, but he could have been way better if he did his own advice. If you look at his portfolio, he talked about that should never sell your stocks, right? Famous example that Monish gave is in Nifty 50. If you have $100, you allocated $2 to each of the Nifty 50 stocks, and you've held until now, 49 stocks have gone to 0. One stock would have beaten S&P 500. But he didn't. He did do his own advice and sold Micron after not making much money in Micron while he held it for, I think, 6 or 7 years. And he sold it in 2023 or 2024. I mean, we can go and look at it's 30.5. And Micron just took off after that, right? This is again a difference between preaching and practicing. Practicing is hard, guys. Practicing is really hard.
And
Preaching
on that,
is
I think
easy.
if you follow anybody in this audience, if you want to kind of follow, pick on those guys who will give you kind of like a system or method. Say they will say we focus on earnings growth rate and or XYZ, because then you can see how well his so-called latching to that factor turns out as you follow him. And I think that's another way to test the goodness of these people who talk investing. Anyway, that's a way to look at
Let
it.
me tell you who else sold a micro. I don't think, if let's say go back to 2021. Hold on. Micron. ON. Micron, not Micron Technology. Let's go back to 20. Let's look at last 5 years. All right. Who exited their positions? Let's go back and look at that. I have data for 106 funds. So Aquamarine, Gaius Pierre sold all his positions in Q3 2022. Great value investor, right? Bob Post, Seth Klarman, whose book Margin of Safety, right, sells for $10,000 on Amazon. Himalaya Capital, Li Lu, the person to whom I think Charlie Munger told that if he wants his personal wealth, he wants to be managed by Li Lu. Viking Global is one of a Tiger Cubs, right? I don't know about SoundSure. These are the great investors, right? Third point is with Daniel Loeb, Altimeter, Brad Gerstner. Right? Brad Gerstner is in thick of AI. Who exited Micron in 2025. Right? Imagine, like, who else understands AI space better than Brad Gerstner? No one else. Or like Gavin Baker, Brad Gerstner, all these people, right? These are like considered to be gurus and you know, who are in thick of all these tech. He sold off his ME position. So don't follow anyone. If you
Monish Pabrai was buying everything by Micron 2017 onwards. It was pretty big.
Yeah, he held it.
And then started trimming on 2023 after he said that 2022 maybe the business of memory was getting affected. But he says he regrets selling that Micron 2023.
No, he doesn't have regret. I think day before yesterday, I posted a video where he says, I don't have regret. The decision I took based on this. Stock didn't do anything much, and it's a cyclical. And with the competition coming from Samsung and all that, they're gonna undercut each other. Yep. And he said that's why he sold it. But again, Manish, you should have listened to your own advice which says don't sell this, at least whole coffee can. Anyway, all the point I want to make is even the best investors they might have a different motive, right? I don't know what the motive for Altimeter Capital was when he exited in Q1 2025. I'm sure Brad Gerstner can see that this is going to be big. No idea. And he never went back in. It's not that they just trimmed a position, bought it and then sold it, exited it immediately. So anyway, I guess that's what, okay. Yeah, we are at 12 mark. Anything else you want to talk about? I think these were the two main, I've addressed the big topics that I wanted to talk about today's meeting. But now it's an open forum. I can open up the breakout rooms if you guys want to go and talk in a smaller meeting. Let me
looking at the balance for today. Sorry. And the income investing section is pretty interesting. I mean, just looking at that, because sometimes, we were discussing picking up option premium on a losing stock. I mean, to me, somebody told me that, this is like you're picking up pennies in front of a huge trade, which is going to wreck you up. So just, I'm so glad you talked about position sizing again. If it's like a 4, 5, 2% position versus 20, 30, 40% position, you're in trouble.
Yeah. So I've heard this phrase, when I started dealing or learning about options a decade ago, I heard this phrase, picking pennies in front of steamrollers, right? Option sellers are picking pennies in front of steamroller, right? Sure, it depends on what kind of a trades you're doing, right? I'm not going to do like 5 delta trade. And that's why I don't do 5 delta, 10 delta trade, because that is indeed picking pennies in front of steamroller. You will, listen, 19 out of those 20 trades will be profitable. One trade will take away all your profits because you are not getting paid enough to take the amount of risk that you take. So that's why choosing the delta is important. And it has worked for me. It has made me a much better long-term investor. I wouldn't have been able to hold BlackBerry or some other, many other stocks that I still hold in a portfolio after going through, even after the drawdowns of during the COVID or 2022, if I had not learned to reduce risk or reduce my cost basis by selling options. Option selling is risky. I don't want to, play down the risk in it. So you have to be really comfortable. First of all, your mental makeup and your portfolio to take the amount of risk, or do just defined risk trades, right? Don't get into FOMO, don't get into greed. Those are way more important things than to find a better stock or good businesses.
So in the last week or two, what kind of observation do folks have with respect to what the market is emphasizing is with respect to factors? Is it like low capitalization or high, I guess I've seen software stocks bounce strongly up. I've seen healthcare stocks bounce up to the detriment of semiconductor stocks in the last 1 week.
Healthcare and biotech, software is not, right? Software is like IGV, still.
Look at it in the last 1 week.
This is last 1 day. This is last 1 day, like 1 week. If you look at IGV.
IGV. But what about these companies like Workday? Pull up Workday,
So okay, let me do a. Oh no!
I think it's basically building a base. I'm just curious. Do you feel this will be kind of like a durable bounce? Because we had this kind of bounce just a few weeks ago. Remember, software went up and came down.
Again, I am still of opinion to buy good businesses. So, for example, Microsoft, still a good business. I don't know. I was actually about to tweet on Friday. I don't understand what Microsoft is trading at, the valuation it was trading, but I just didn't have a time to write out the whole tweet, and I did not do it. I should have done it. Not Friday. It was on Thursday, and then I think Friday it was up a few percent. But if I look at a Microsoft, it's a great business.
Would you include Apple also in that category? Apple also had price.
Apple not as great as Microsoft.
Yeah, right. Microsoft is trading like a software stock right now. Software getting hit.
What else should we trade?
Microsoft is back as like where it was 3 years ago.
Exactly. It is a software. It was always a software stock. They never emphasize research like Google Corporation. They have nothing. It's a piece of crap company, I think.
But again, I think if I look at Microsoft 8.6, the way I want, where did I went to the TCF, was looking at it, right? Oh, come on, what's the issue here? It doesn't refresh. Okay, something I need to look into.
Mag 7 has become the lag 7 now.
Yeah, Mag 7 are down overall. So if we're looking at
the Mag 7, you should.
This is what held me back on in terms of buying it on Thursday, even though it looks very cheap. Was implied free cash flow growth is 16%. Okay, and if you look at the EPS and the analyst EPS and revenue, next 5-year projection is around 18%. Even if they convert all of their earnings into free cash flow, they are not from a cash flow, discounted cash flow perspective, valuation perspective, they're not that cheap. Right? 16% that they are fairly valued.
Yeah, essentially last several months, their kind of growth expectations have come down, right? That's why it's what you're seeing is happening.
Yeah.
What you're seeing is because of
Let me
that.
go back and see how, in terms of their free cash flow conversion.
Which basically means the stock came down in the last 6 months.
60, yes, that's not great either. So I didn't add to it just because of this. Now, stock could go higher because the market, does what it is in the short term. It always try to find the next big thing or the next shiny object. But I thought I will wait. I mean, I have IGV in which Microsoft is there. So I'll hold IGV. But you talked about Workday, right? Workday
Google also, yeah.
No. Look, if you look at Apple's the score will be less because of their balance sheet. I think they have a lot more debt, and there is not much of a growth on Apple, right? Growing 4%, 6%. Apple get dinged on these two areas. Look at a revenue growth CAGR, last 5 years, 6, like say single digits. That's where Apple get little dinged.
How about Google?
Okay.
Google.
Let's do better would be this, right? Me trying to do one by one. Now that's the reason why having a quality score in a watch list will help. Is give me a ticker: GOGL, AAPL, MSFT, NVIDIA. That's it.
Micron. SanDisk.
MU. These won't show up well because the margins, etc., on these businesses has been historically low. Maybe in a year later it will show up better.
And how about Exxon and Chevron?
XOM. Chevron. What's the CVX?
Yeah.
I never owned these companies in my life.
I mean, income investing, right? So this could be a good time. Energy prices have come down.
Intel 3. So Exxon, Chevron, not too bad. I mean, now we can get into the details of, maybe I should have one view in which these individual numbers show up.
So SanDisk was showing a high quality score for you?
No, it's 3. It's a low margin business, dude.
Oh, NVIDIA, Microsoft are the ones. Okay, I got it.
NVIDIA, Microsoft, look at the margin profiles of NVIDIA and Microsoft.
Google, okay.
Right. These are all, so let's open SanDisk. I think it's all driven by it's the revenue growth.
Yeah, SanDisk is not a good, Micron is, so SanDisk doesn't have a positive EPS. It's just growing.
Not even a revenue growth. Maybe revenue growth in only in this quarter. Like this is is this a yearly one, right? So we're looking at 2025. Maybe let's look at where's the detailed financials? Look at the quarterly one, not annual, quarterly. Now, yeah, they got a good revenue growth behind it. But from yeah, their margins from a negative, now they barely moved into positive. Even if you look at operating margin, it's 8.32%.
Right.
It's not good margin business. Its revenue growth is behind it.
It's a story stock. Essentially, they are in a really unenviable position.
Yeah.
Nobody can kind of take their position.
Let's look at CVX. CVX, again, this is a commodity. So that's why there's not much of a moat, because don't really care whether it's Mobil, you're taking, Chevron, whether it's Exxon, or whether it is whatever. There are 10 other companies. This is a commodity business, but good balance sheet, probably returning capital to shareholders, and have a real cash flow to talk about, right? 4% buyback yield, 4% dividend. There you get 8% return on an investment through these two itself.
But the stock price may not go up.
And decent, yeah, stock price may not go up, but it's good for income generation people, right? Those who want to get dividend to pay their bills. So, but not great for someone who want to be a growth investor. XOM, same space. Like not much of both are in the, like, oil is an oil, right? You don't care when you go to pump. It's an undifferentiated product, so you can't command any premium. The market determines the pricing, not the company. You are price takers in this case, but it's a decent cash flow, good capital discipline, solid balance sheet, again close to 7 to 8% of dividend plus buyback yield. Okay, what's your take on Canton Coin Network? I have no idea. There are hundreds of these coins, and I have no idea what this coin is. Maybe another new. I've seen many of these coins come and go over the last many years. So if you have a thesis, you understand what the project is, and can wrap your head around it, only then take a position. Right? I can't remember how many white papers and yellow papers I had read during 2017, 18, 2021. Every time when there's a bull market, you'll see tons of these coins will start to come up. In 2023 or when the whole meme coin started coming, there were people who would actually, and it was so ridiculous to see a presentation. I think it was on a Singapore, one of these conference, I think Bitcoin conference, or was it ETHCon? Murad, anyone remembers? Probably crypto folks will. He gave a presentation on strategy around meme coins. What the heck are you even talking about? There is no freaking strategy on trading meme coins. It is just run, it's like all pump and dump, right? Hopefully that guy is doing okay. But I have no idea about Canton Coin Network. Never looked at it. I don't even know what the area do they operate in. What's the framework you follow for risk analysis and position sizing? Now I'm looking at this quality score and see that if it's scored lower in quality, and I do not have much thesis around future, I want to have a very small portion in my portfolio at an overall portfolio allocation level, right? If it is a good company, and this quality score apply only to individual company, then I'm okay to have a little larger portion. Short-term technical contrarian, I'm watching MSI closely here. So I actually sold on STRC, right? I never bought STRC till now, but now I sold a put on STRC. Right? Again, very small position. I would say a little more, try to take an advantage of it. If it goes down to zero, that's okay. It's a small position. But if Saylor does its magic, and it's a decent premium was available on this one, right? So it expires, I think, on 17th of July. And you get almost 10% of your strike price as your premium if it get assigned. And I did only one contract. I'm like, okay, I'll take a bet. But that's I would say no opportunistic trade. I'm not long term. I don't want to hold this stuff. Sunil, I have MU since 2025 is up a lot. Oh, of course. MU is like now the MU is NVIDIA's of 2022. So let me just share the earnings and the reason why MU is up. Right. Okay. Revenue was up like 345%. Right. These numbers are like NVIDIA type numbers, which NVIDIA had reported in 2023. Unbelievable growth numbers. So why not? But there are some risks. If you are an MU investor, their margins are being, they're getting basically a little hit on their margins, which is what market may be a little concerned about. But right now, my gosh, this company is on fire. What do you think about two upcoming IPOs? Which two IPOs? Are talking about Anthropic or OpenAI? Okay, OpenAI and Anthropic. Let them come up with the numbers. The revenue growth is high, but I think that they are spending a lot. So without looking at the numbers, I can't tell anything. You know me, I don't invest in an IPO. IPO is a time when the company dresses it up really nice. They're never going to tell you anything bad about it. I want to wait for the company to report some results before I give my money to them. That reminds me, those who did not give into SPCX, right? You can now buy it at almost the same price at which I had IPO'd.
Or like me, sell short now.
I will never short Elon stuff. Or if you did on Cerberus, you can buy at a lower price at IPO. If you did not ask for allocation at IPO price, you did better than all the bankers, Wall Street bankers who bought shares at 185 for Cerberus.
So Vivek, both of these are selling at astronomical price to sales ratio. Do you think realistically today is a buying point for either Cerberus or SpaceX, or they'll go down further?
I don't know where the stock will go down. I'm not going to touch either Cerberus or SpaceX.
Okay.
I got assignment in SpaceX and STX this week.
STX.
So I'm actually now selling short both of them because now I see that the market has realized that the valuation is unsustainable and now it's going to go down further.
A lot of short sellers, way smarter short seller than me. I'm not even a short seller.
It's not being smart.
Taken to the woodshed. So I don't individual stocks. I don't do short selling.
Right.
There are better ways to make money with much lesser risk. I don't know why you.
No, all I'm saying is that I don't agree with the thesis that it's a buying point right now for Cerberus or SpaceX because their valuation is still at price to sales ratio of 100 plus.
The valuations is crazy. Price
to sales. That's the only thing we can look at. And so given the past record of such IPOs such as Rivian, things will likely go down further rather than up. So please don't buy.
No. Only thing is that you don't know when the Reddit crowd will wake up and come after it. That's the only thing. Nobody has been able to predict it. That's the reason after the game stop, I've decided not to do short selling on individual stocks. That's the only reason. From all, like, I know it's a super overvalued. That's why I never touched the stock and I'm not going to sell a short put on it. Not going to buy it. But I cannot control when the crowd could come after any one of these stocks and could jump it up to 20%, 30% in any day, right? I just don't want to take that risk. That's my only reason. Like Melvin Capital taken to Woodstead, Carson Black, they stopped doing short selling. Hindenburg stopped doing short selling, right? It's becoming very difficult, especially with this whole crowd that would say, oh, let's get together and gonna buy the stock, doesn't care what the valuation is, let's take it to the moon. Each one individually could be losing some portion, but if you have a short position, you could just get decimated.
Right.
MSFT 52-week low. Oh, added so many features. So Ashwani, you have to click on to access Optalyzer. Yeah, that's where everything is going in. And eventually, when I open it up right now, it's only on a invitation basis. But once I open it to Optalyzer, that will become the home of that will become a landing page. I'm still, like I said, I have 83 items in my backlog list. I'm still working on.
Yeah, I have the access. Thanks, Vivek.
Okay,
But
cool.
it looks great. Just the performance is a bit slow right now.
Possible. And I think right now, over the weekend, there is a lot of data for fundamental and last 15 days of financial data. Those jobs start to kick in. That's why I was wondering, why is the NVIDIA still going saying, okay, fetching data? Then I realized the weekend. What else I want to talk about is what's the weekly stock selection strategy? Morally, repeat your question. I didn't get you. What's a weekly stock selection? Is it still there, Murali? Okay. Sunita, I attend every day 1 hour and show the stock ranking. Oh, okay. Oh, I think Sunita already responded. NVIDIA MU are my best stock, but I have been covered CC on MU at 760, 1200. Hindenburg stopped short selling. Yes, Nate Anderson, he closed his shop. All right, sorry, someone was saying anything and I cut them short. Go ahead.
Sorry about that. Do you have any thoughts on eBay?
eBay has been on turnaround. That's all I know, but I never looked at eBay as a company. Is its ticker is eBay?
I think I asked you back when GameStop offered it for 125. So I bought 100 shares, and I think I got too much junk in my portfolio, and I want to get rid of it. I figuring whether I should buy a put or sell a call on it, but then I figured I'm confused.
So not too bad a business. It's an average business with like $11 billion, 20% operating income. It's not a bad business. Looks like they turned themselves around. Now the question that is okay, business is average. What are you paying for it?
But it's a monopoly, right? It's a monopoly on people who want to sell their crap, right?
I mean, you can also sell it on Etsy. You know,
well, no one does Etsy. I've never bought anything on Etsy.
I mean, the craftspeople are on Etsy. eBay is more of nowadays like new generation kids. eBay is like people like you and I use it. New generation kids, they're all on FB Marketplace and probably maybe on TikTok. I know my kid, she buys on Facebook Marketplace. I'm like, what the heck is that? So, Dad, there's a lot of stuff you can get it. People sell their stuff on Marketplace. But I think if you look at from a revenue side, it's not that great, but then they're cutting down the cost and able to do a decent on the margins front.
So, Vivek, it's just leave it alone. Don't even look at it, right?
it's not available at a cheap valuation. Let me put it that way. Let me see if they convert all their EPS into cash flow. It's not that it is available at cheaper valuation. So if it's a decent business and it is fairly valued currently, I would say that.
Would you just hold on to it?
If you have it,
Well, I have it.
if you have it, then let me see. Are they paying any dividend, anything?
Oh yeah, I got dividend already.
Yeah, so they are buying back their shares and they're paying a little bit of a dividend. It's a okay business and it's not egregiously expensive. If I were in your position, I would probably hold it. But
Okay,
I don't know what else you hold in your portfolio. So you have
I got a lot of junk in my portfolio. I just, you know, Vivek, I miss Palantir and NVIDIA, so I realized just buy anything and hope in 2 years.
This is not a junk company. I mean, I've not looked at eBay. I'm just looking at now, and this doesn't seem to be a junk company to me. But it's not a high growth company. Also, it's a okay business, right? That's how most of the businesses.
Yeah, so
most of the businesses should fall between 4 and 8 or 4 and 7, right? Most of the businesses probably will be between these, right? Other like above 7, you become a good business, exceptional business. Above 8, 8.5, and then below 4 or 5, you start to become like bad and poor kind of.
Yeah, because I thought they were going to have a bidding war on eBay.
Hold on. So that the Ryan Cohen came with that, and
Yeah,
everyone
no
knew that
bidding war. Just one guy is raising it to 135.
No, it was a joke. I'm like, I don't think anyone took him, even Ryan Cohen, seriously.